Welcome back. You're watching Business Morning on Channels Television. We're talking now about the U.S. Fed's decisions on the global economy, especially emerging and frontier markets like Nigeria. How does this affect the decisions by the U.S. Fed Reserve? How do those decisions affect Nigeria? For the first time since 2006, Janet Yellen decided, and her committee, of course, decided to move interest rates or shift its key interest rates. Now, this caused some form of joy for market analysts because we saw impressive movements at the equities market, but not in the commodities market. Now, a lot of people have been wondering, how does this affect Nigeria, since we seem to be talking so much about it? We're talking to Oji Udemezwe. He's a financial markets analyst and a former banker, to give us his perspectives on this. Good morning to you, Oji. Thank you so much for coming in.
Good morning, Harriet. It was my pleasure to be here.
So let's get your perspectives on that decision. How do you think it affects us? How does it impact on Nigeria's frontier markets? We're talking about the equities markets, talking about the general financial markets as well.
Yeah, the impact is going to be huge, even though the change in interest rate was just a quarter of 1%. It seems very little. But the impact around the globe is going to be huge. And we have to begin now to position ourselves and prepare on how to cushion this. You know, when interest rate gets higher in the US at a time like this, it's just going to worsen what I may call the cocktail of woes being faced by emerging markets, you know, and developing economies like Nigeria. The principal thing in terms of its impact around the globe is that interest rates getting better in the US means that a lot of funds will find their ways, you know, even much better in the US market. Investors, you know, decide on where to place their funds, you know, based on several, you know, criteria. But this decision to increase interest rate is one major factor that will influence investments, contributing their movement back to the US. And that's one major factor. Another key factor is that because, you know, a lot of emerging economies like Nigeria, we are borrowing economies. We are borrowing heavily. This decision is going to clearly increase the cost of borrowing. And of course, the fact that this change in interest rate is also, you know, envisaged to increase the strength of the dollar. All those countries, including Nigeria, who are owing, you know, in US dollars, will have more burden paying their debt. This is further complicated by the fact that commodities prices have continued to go down. In fact, there are complications here and there. The fact that oil price is going down, agricultural commodities are going down, you know, even solid minerals are all going down, metals and the rest of them, means that those emerging economies like Nigeria are having, you know, less and less quantum of revenue to enable us to run our economy and pay our debt.
Which means the federal government should begin to look at probably increasing the amount it's setting aside for servicing of debts.
Currently, we spend almost going to 25% of our total budget in servicing our debts. And it's going to get worse next year. Already, we are getting all kinds of warnings from the president, from the vice president, from the minister of finance, from, in fact, everybody warning us to brace up for a bad 2016. With this development from the U.S. market, that, you know, announcement is, you know, is more impactful, because 2016 is actually going to be very challenging. But there are things we can do. I'm going to come to that later. You know, it's not all bad news, okay? But the point is that we're going to face more challenges because now we receive so little money to finance our budget. And we hear already that we are planning a budget of about 6.4 trillion next year. How is that going to happen? It means we are going to borrow much more money than we were borrowing before.
Don't forget, we also have a Eurobond. How is this going to also affect Nigeria's Eurobonds? About $1 billion.
The fact that you are finding it more and more difficult to pay your debt, your bonds are going to continue to fall in prices. They're going to get more junky in nature. Okay? And raising money is going to be more and more difficult for us. Already the central bank is rolling out a plan to raise some a trillion. In fact, the plan is to raise about 1 trillion in the next few months. What's that going to do to the economy? You know, when these are being done, interest rates are actually going to be going up. As government drives to borrow more at more aggressive interest rates, you know, it's going to counter the effect of dropping the NPR, which we've seen, dropping the CRR. So there are going to be controversies here and there. And as they push this more borrowing, both domestic borrowing and foreign borrowing, interest rates will continue to go up and up in Nigeria. And as that happens, we're going to halt economic growth, which is already slowing down, has slowed down seriously in the economy. So there are problems here and there.
So which means that the central bank at the next meeting should probably be looking at jerking back the NPR or CRR.
I will not encourage that. This is just like being between the devil and the deep blue sea. It's a very corny situation. That's why I always advise we should do good things. We will make positive changes when the days are good. The days are evil now, and so these changes are not, if you advocate that central bank will push the rates back, you're actually in a way saying that we should hurt our economy the more. Now, if the central bank does not have to push the rate, upward and leave it where it is, at a lower rate, well, the economy should have an advantage from that. But the point is that central bank will not be able to sustain that, because already to manage the devaluation, of course, the issue we're facing now, the gap between official exchange rate and the parallel market rate is now almost 100 naira. And government is deeply worried about this. The issue is, what would they do? Will they go the way of relaxing the tough policy, the tough foreign exchange policies? That's one option, because you must close that gap. If you don't close that gap, the bad behavior you find in round tripping will continue to worsen. And in fact, you find that the rate we find in the parallel market now is even much worse than we should find if we have found a normal market-driven rate for this,
And a lot of people are speculating it might get up to as much as 300 on the parallel market.
But that's not the real value of Naira if we were to do the right thing. Now we're going to pay more penalty, suffer more for refusing to do the right thing, because if we had devalued to some extent, maybe we could have found ourselves somewhere around the band of 240, 260, Naira for $1. But because we refuse to devalue, speculation, uncertainty is increasing. And with that, people are beginning to keep their assets more in dollars.
But why?
The dollarization of the economy is going to get worse.
But why push for the devaluation of the Naira? What is your own drive, or what's your own reason for asking for devaluation?
I've appeared on this studio several times saying the same thing. You have to accept the realities of your economy. An economy that has been very wasteful, not keeping enough when the days are good. When we had so much money flowing, the governors and all the people who are managing the economy, believed that it was better to share all our monies. Asset crude account didn't mean anything to them. The bills or legislation that was meant to make that account stand and enable us save for days like this could not see the light of the day. And the economic managers found it difficult to push through, making that happen. Today, we can call people's names. Oh, you didn't save enough for us, but why did that happen? We had huge monies flowing in the states, and these monies were being used, without proper planning. And today, the states are owing, and the monies were not even used enough to, build infrastructure that will enable the economy to even have better productive capacity. By now, we should be talking about, consuming our own rice, even if we don't export. And by the time we consume our own rice, we see enough savings from the amount of foreign currency we need to import rice. There are several things I can talk about here. But because we have been behaving badly, we have not done these positive changes at the right time, we have no other thing to do now than to take the passion.
So let's talk about the way forward now. 2016 is a year that the federal government and the state governments have told Nigerians, you need to tighten, you need to brace up yourself because it's going to really be a bad year. But what can be done now to cushion the effects of not just the decision by the US Fed Reserve, but what the central bank as well as the federal government are trying to do to protect the economy?
One, the US increase in interest rates, as I said, will continue to encourage funds flow away from our capital market, generally away from our economy. Funds are going to continue to find their way back to the US. And as investors continue to look for dollars to raise, to move their money back, the pressure will continue to be on our local currency. Now, what can we do to get through this situation? One, we must seriously cut down on our expenditure as a nation. Well, it is not like we should not spend. Every economy must spend to keep the economy going. But we must spend more strategically now, more than ever before. We must cut down the size of government. We have made these points, so many times, and it doesn't seem to cut it. We're still carrying about a legislation that is so big and bogus. People who are still very eager to approve more money to buy, cars at a time like this. we still have, even though the number of ministers seem to have reduced, but have we actually got better in managing the amount of money we spend in that structure? The civil service is so bloated, and so many ministries and NDAs are still duplicated. In fact, multiplied or multiplicated, doing the same thing. What can we do at this time? Even though you can say that might encourage unemployment if we begin to cut down, it's actually a very cunning situation. The point is that we must begin to manage our costs very carefully. If we are going to borrow because it's necessary to borrow, it's easy to say that 1.9 trillion borrowing next year is not a small joke. That's going to worsen our rating, coupled with the fact that we are not even capable of paying back this debt. So it means to pay back your debt and rescheduling these loans.
Nigeria's debt threshold is still at a very appreciable level. I think it's still at about 40% or thereabouts.
We like to say that our debt to GDP ratio is still good. So, I mean, we like to say that debt is addictive. Borrowing is not a good thing. He who goes a borrowing goes a sorrowing. And now, with what has happened in the US, we are going to pay much, much more by borrowing. One, the value of the dollar you use to pay back the debt has strengthened against your own economy. And it means you have to raise much more naira than before to even pay the principal. Then the interest itself has also become burdensome because interest rates in the in the US, of course, the Bank of England is expected to follow very soon. Very soon. By increasing interest rates too. So at the end of the day, whether you're borrowing in pound sterling or you're borrowing in dollar, the cost of that borrowing is going to go much, much higher, very soon. So we must watch our borrowing. And I was about to say, if we must borrow, we must be careful what we borrow to do. What are we going to do with our debt? Borrowing to consume is very criminal. In fact, murderous at this point. If we're borrowing, we must be sure that we're borrowing to boost our capacity to curtail future borrowing in the future. What do I mean by that? If we borrow, for example, to be able to package our local products, we borrow to be able to, sponsor local production of rice, find out where they are, encourage, spend in promotion of these products. That our rice is not full of stones; they're actually very healthy. Of the rice and the rest of them, we borrow to stop, heavy importation of rice. We borrow to, encourage export of our groundnuts, of our cassava, of other, agricultural products. We borrow to boost power supply so the economy can produce for itself, self-sufficiency, and then see some level of more export. If we borrow to do these things, then the impact of that debt, these activities on their own can enable us to pay these debts. But if we're going to be borrowing to do more jamborees, buy more cars for legislators, do a lot of frivolous things, run operating expenditure, I'm waiting to see what structure we're going to have next year. Because in the past 4 or 5 years, we've been having declining ratio of capital expenditure to total budget figure and increasing ratio of OPEX to the total budget. I'm eager to see what's going to happen next year. And not just what we state to do, but what we do at the end of the year. Because nobody looks at the budget at the end of the year. What actually happened? I hope that report will begin to come now. We have a government that promises to be more transparent and more change-minded. Okay, so Oji will have to keep our eye out for that particular report. But thank you so much for coming on the program. Thank you very much, Harriet. Well, Business Morning continues in just a moment. Stay with us.